Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 6 of the Forex market review. Today we're going to take a look at a few currency pairs and one based on a new strategy. We're going to look at something a bit more aggressive. It's pretty similar, but we're just going to avoid the 4-hour AO divergence and try to look at a few more opportunities to take some trades. Without any ado, let's jump straight to those charts. So what you might have noticed in the Twitter announcement, I mentioned that we've had a pound CAD short position, and that one has stopped out overnight with some positive Brexit news coming from their parliament. So that's unfortunately caused some strength instead of weakness with what I was chasing. However, I'm going to go through the trade setup just so you know what's going on. So normally we want to see some weakness in the market. Normally we want to see it start to find some resistance at a DSR's level, start to push a bit lower. Then we look for our 4-hour AO divergence, and here we don't have it. And then we would look for an entry on the 1 hour. So the only difference with these current rules is pretty much exactly the same, but we're just not worrying about having a 4-hour AO divergence. Now the likelihood of it being correct or working for you is a lot less than having the 4-hour divergence. That one's probably got about a 70% success rate. This one's probably got about a 50 to 60% success rate. So it's a slightly less success rate. You're going to have a lot more losers than you are going to have winners, but the chance is trying to get in, have a very tight stop loss, and then get out a lot earlier than normal. So in this example, we look at the first large AO, which is this one here. So we assume this one is wave 3. So this is 1, up for 2, and down for 3. Using our Fibonacci retracement tool, we go from the lows to the highs, or the highs to the lows in the opposite direction, and then we wait for the pullback to the minimum of 38.2, and we wanted to test around about the 200 EMA line, or at least give us some 15-minute AO divergence. So we still want some type of divergence, but instead of chasing on the larger time frame, we're looking at on the lower time frame. So around about this level here is we're looking at the entry. We didn't have any AO divergence, but we did have price come back to 200 EMA line. So entry would have been somewhere around down these levels here. You probably would have had a tight stop loss of something around 60 pips, and it came down to about 45 pips. Just missed our minimum 1-to-1 target. It was around about just we're down here, about 60 pips. We wanted to move to break even and then try to double our money down to these lows down here. Unfortunately, with the Brexit news that came out, we saw this spike back over, and that stopped us out. So again, same rules as we would normally do, but instead of requiring the 4-hour AO divergence, we are just looking for at least a 1-hour 200 EMA line being touched, or 15-minute AO divergence with a very tight stop loss and very tight profit targets. We have the based on our old rules, which we're still using. So here we have our push down lower. We look for our 4-hour AO divergence. Here we have the higher high in price with our lower AO. So we're still taking both trades. These ones just have a higher success rate, but they don't occur as often. Then we drop down to a 1-hour chart, and we see this large push down lower, the first large AO. So here's probably 1, up for 2, down for 3. We've now seen the pullback for 4 and down for 5. So if you're looking at trading this based on the current new rules, we wouldn't have entered the market because it didn't come back to our minimum 38.2, and it didn't have the 15-minute AO or even touch the 1-hour 200 EMA line. So therefore we couldn't take the very tight trade, but we can still look at this as a possible trade on the higher time frame. So if we can see this pull back, hopefully somewhere it might pull back to this 200 EMA line, we could look at getting short in the market and having a higher stop loss of around 100 pips, trying to move to break even down to these lows and then traveling it down even lower. Where do we think it should go? Well, again, use your Fibonacci expansion tool. If we assume it came back to those levels up there, we go from the high, you can even take this high point, from the high to the low, back up to where it retraces to. So we'd be looking at getting out there. And if that's the case, we're looking at 100 pips stop loss. We can make our 200 pips to the first Fibonacci expansion level. And that would be a good 1 to 2 risk to reward. Euro Aussie is setting up. This one doesn't have 4-hour AO divergence, if I'm correct. We'll just have a quick look. This is kind of 6732. And this has a high of 6768. So it just missed having AO divergence. So we can't take it based on that rule with 4-hour divergence, but we can take it on the very tight stop loss. So this is 1, up for 2, down for 3. So in this one, I'll just draw them in for you so you can get an understanding if you're not sure how to identify wave patterns. There's 5 cycles in the wave. Wave 1 pulls down, wave 2 pulls back to roughly 61.8%. Here we can see it's hit the 61.8%. Then we have our pushback lower for wave 3. We can normally identify wave 3 by the first large AO. When it comes back to the 0 line, which is above this line here, this imaginary line in the middle there, when it comes back above that, we know that this wave 3 is ended. So at this stage, we can assume this is the low, and this is a beginning, but we don't know until this comes back to 0 line. And when it does, we hopefully see an ABC pattern, ABC, pull back to the minimum 38.2, and hopefully it comes next to the 1 hour 200 EMA line. So if this does occur, we would look at an entry when it gets close to that, or because we already have this point here with a pullback, we might have a higher high in price with a lower AO on the 15-minute chart. So once we identify that, we'll be looking at our entries, very tight stop losses, maybe looking at 20, 30 pips, and would be looking at getting out before these double bottoms. So definitely can look at making a 1 to 2 risk to reward before these lows, and that would definitely be fantastic. It's always good to try to get out before making new lows, and that's why with this rule, we need to have a tight stop loss because we don't have the 4-hour AO divergence. We need very tight stop losses and therefore very tight targets. But you will get stopped out a lot more than normal based on having a 4-hour AO divergence. And that's from my back testing. And by all means, please test these rules, go back at least a year and see how they work on each chart and each time frame if you are required. We have the pound yen also setting up. So here we have wave 1 up for 2, down for 3. We can see this large AO. Use our Fibonacci retracement tool. It's come back above the 0 line here and it's almost touched the 38.2% level. Now for me, I probably want to get it a lot closer to this 1 hour before I would take it. So I want it to see a lot higher. Or if I have 15-minute AO divergence going down the lower time frame, I don't. So if it can maybe pull back a little bit more and then probably push a little bit back higher, we're likely to then have our 15-minute AO divergence. And when that occurs, this 200 EMA line will probably likely come down, and we'll look at some entry levels, probably have a tight stop loss around 50 pips, and you can definitely get out before these bottoms. And so we're just looking for some, maybe even there, very tight 50 pip stop loss, 100 pip profit. We're not trying to chase triple digits, quadruple digits and things like that, like we would normally try to with the 4-hour divergence. This is the simple, using the very similar technique, looking for the large AO, but with a very tight stop loss and a very tight take profit, always going for 1 for 2. That way we can have a low success rate of 50 to 60% and still make money, and that's why this is good. And we have set up a pattern trade, and I've mentioned this on many of my videos, but here we have a cipher pattern, and we have A to B, B to C, C to D, and the pullback is roughly about there. To work it out, we go from the start to the end. The pullback's about 78 to 88.6, so we're in there now. And if you got in the market, you'd put your stops up here, so looking around 125 pip stop loss, and you can definitely make 500 to those bottoms there. So I definitely wouldn't go much lower down to there. I will definitely be looking at moving it to break even before it gets to these levels and seeing how low you can go. Where do I think it's going to go? Again, using the Fibonacci retracement tool on this leg, we're expecting the first exit to be about 38.2, which lines up with this support area. And the next one is 61.8, which is down to there. So looking at, you could probably risk 150 pips to get 300, but you probably wouldn't need much more than 125. Obviously, look at your own risk to reward, look at your own trading styles, seek your own professional help, and backtest, backtest, backtest. This is the only way we become successful. Thank you for that. That was week 6 of the Forex market review. So as I indicated on a few of those charts, we're taking a very similar trade setup using the 1 hour wave 3, looking for the large AO pullback to minimum 38.2. But this time we need to see 15-minute AI divergence or the 1 hour 200 EMA line get very close to touching. So based on those, once we have the minimum 38.2, we can then look at taking the entry with a very tight stop loss above the highs and going for 1 for 2 targets. So besides having the 4-hour divergence and having a more larger stop loss and going for a lot more, going for new lows, in this case we really need tight stop losses and therefore tight exits, and be prepared to lose a lot more than you win, but hopefully you're going for those 1 for 2 targets, so therefore your risk to reward will pay out in the end if you can emotionally control yourself to stay with the trade. To do this, backtest, 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 prove the system works for you, seek your own financial advice, and then use a very low risk until you get the confidence in your system, then slowly increase it. You cannot become successful by just throwing money at it and hoping for the best. It takes years to get there. But where do you want to be in a few years' time? Where you are now or where you want to be? Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.